Let's be honest with each other. Nobody wants to waste money. You need to spend money to make money, but you don't want to waste it. For every dollar that you invest in your insurance career, you want to make sure that there is a quick return on investment. You are in the business to help people and to make money. Today, we have Blaine and Jamie from our executive team at Insurance Centers of America, and they are here to tell you exactly what you need to know so you feel that your investment in your business is well spent. Welcome, Blaine. Welcome, Jamie. So great to have you today.
All right. Well, thank you, Violet. It's great to be here. Thanks for the introduction. Blaine and I are very, very excited to talk about this topic because it's something that we have had a lot of experience with. What we're going to be talking about today, really, I think, is something that you want to pay attention to and really look for. We have a unique background, both of us, in the fact that we have worked with a lot of different large agencies, groups, networks, clusters, whatever you want to call them. And with these groups, they often overpromise and underdeliver. And they do this in a few different areas. With that, Blaine and I are going to actually talk about when the agent or the producer gets into the program, they realize that they're in a situation where they actually can't be successful, but they've invested a lot and they have, maybe left where they were, maybe a captive agency or an independent agency, or maybe they're just starting and now they're in a situation to where they can't succeed. So we want to talk through some of these things that you want to watch out for. And I think one of the things that maybe we might want to start off with is the financial kind of side of it. And so I'll just kind of kick this off and then I'll kind of push it over to Blaine. Trying to start a career with one of these groups is the cost, not only the cost, but also financial support. Blaine, you have seen a lot of different groups and what they ask for in their contracts. Do you want to kind of elaborate on that?
Yeah, thanks, Jamie. Again, we see a lot of crazy things in this industry that we work in. One thing that I see is really look at the cost. If they're going to charge you an atrocious amount of money up front, and see what are you getting back for your investment. This brings up an instance that came up a couple of months ago. We were working with an agent to bring on to our organization in California. She decided to go with somebody else. She paid $25,000 up front for an introduction. After signing the contract, she finds she only gets access to 2 carriers. And then also she can't write any commercial lines until she writes $500,000 in personal lines. It's nuts what these groups are offering. And then with the group that she went with, it's a franchise group. She has to operate under their name. They do all of the servicing. So she loses 100% contact with her customers and she doesn't even own her book. It is crazy what happens with these other groups. So one piece of advice, look at the contract. If it doesn't make sense and it feels wrong, it's probably not the best contract to sign.
And to add to what Blaine just said about that, I have another story. Recently worked with a producer that's researching. He's looking at different groups to start his insurance career. He went to several. One of them asked for $25,000 down, and then they wanted immediately monthly payments, fees from him before he had even made any commissions at all. Another one asked for $40,000 down, and again, monthly fees before he's even able to bring anything in. And so, that's kind of a difficult situation to pay that amount and have that kind of overhead, but you're not even bringing anything in as far as commissions yet.
Great points, Jamie. It's sad what happens to some of these agencies. Another topic I want to talk about is the financial support. Ask about profit share. Is profit share available? Is there a threshold to hit profit share? What's the profit share look like? What's your loss ratio have to look like? These are legitimate questions. And folks, these are large bonuses that the carriers pay out. And you want to make sure you're eligible to receive profit share on $1. You don't want to have to be a certain size to hit profit share. You want to make sure you're eligible to receive profit share.
Besides the profit share, there's also incentives. Now, what happens is, Blaine and I, we've been in the business long enough to know that carriers want to pay producers and agents directly different incentives to write more business. And what's interesting is there's some groups and networks and clusters out there that will deny their agents or producers from getting these incentives, sometimes local incentives that the carrier wants to pay directly to the producer or the agent. And so, that's something that you want to look for. That's additional money on top of commissions. I know of a carrier that pays like say, just for as an example, $50 to their own personal account on top of commissions just for writing one policy. Some of these groups out there that sadly want to keep all of that for themselves, and so they don't let their agents get that incentive. Those incentives are huge. You've got your commissions, you've got profit share, and then you've got incentives on top of that. There's lots of ways to multiply your earnings and your commissions and the money that you can get on top of commissions. Because let's face it, when it comes to the financial support and this business, it's about making money. So, let's talk about what we really are trying to do here. We're trying to be successful and make money. But the story is here, just pay attention to that contract and make sure that you have the opportunity for all of the different ways to get paid. Ask specific questions around the financial support, the profit share, the incentives, and the commissions. And if you know those clearly and you feel really, really good about that, then you're probably in the right place.
Jamie, that brings up a lot of great points. Some of the things I think people really need to look at: do they do direct market access? Do you get direct access directly into the carrier? Do they do digital and print marketing? Folks, believe it or not, old school print marketing works. Mailers work if you follow up on the mailers. Sales generation and training, do they have that kind of support for you? Do they have a beginner to advanced level education? Do their education continuing ed credits for your insurance license? Do they have a pre-licensing course? Do they share in profit share? Profit share is a big one. It's a big question to ask. Do they have additional commission, like Jamie talked about? Do they offer overrides on top of your new business and renewal commission? What's their commission rate? Do they offer the highest commission rate in the industry? Online market access. Do they have a presence online? These are enormous things to look at. Other clusters, they'll give you market access and they might share in profit share. Ask the really big questions. Do they have this additional support that you need to be successful?
Thank you so much, Jamie and Blaine. What I love about working with both of you is together you're bringing 40 years of combined experience. And today you shared with our audience the tough questions that they really need to ask and the very things they need to look for when looking for a group to help them grow and scale. That's all we have for you today. Thank you so much. If you got value from Blaine or Jamie, please give us a thumbs up, hit subscribe, and hit that bell so you never have to miss another tip on how to grow your agency in the new workplace.